The following content is for informational purposes only. The views and opinions expressed by the hosts and guests are solely their own and do not necessarily reflect the views of Aliyah, its affiliates, or any organizations represented by the participants. Nothing discussed should be construed as financial, legal, or investment advice.
Welcome to Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving the markets. I'm your host, Stefano, Director of Institutional Services at Alea, and with me I have Sidney Powell, co-founder and CEO at Maple. Maple is a blockchain-based decentralized credit marketplace and on-chain asset manager that connects pools of capital with institutional and professional borrowers seeking structured financing, combining automated smart contract execution with traditional credit underwriting practices. Sidney, so great to have you on the show.
Thanks for having me on, Stefano.
Definitely. I'm excited to chat a little bit with you. Last year we had on your co-founder, Joe, and this time around I'll be getting your perspective. Let's start off with maybe going back in time a little bit. Your background. What were you doing before Maple?
Yeah, good question. So this is going back a few years now, but I used to be in banking back in Australia, and I was in an area that was called securitization. It was a little bit complex, but what it means was that we would help lending companies to borrow by structuring bonds for them, and they have insurance firms, pension funds, and other institutional investors who buy those bonds. And that's what gives the money to lending companies so that they can then make loans to their customers. So I did that for a few years, and then I wanted to get more of a startup type experience. So I went to a company that was doing commercial leasing and lending. That was where I met my co-founder, Joe. And that was, I joined there as like employee number 40, stayed for a few years, and then from there went to Maple. But that gave me a taste of what it was like being on the other side from banking. So it was client side. That company was trying to raise debt funding in order to make its own loans and grow its own business. But yeah, that was what I was doing before Maple.
Interesting. So would you say that already laid, let's say, the fundamentals and the groundworks for what you've been doing at Maple in terms of thinking about finance, how to structure products, etc.?
I think so. If you look at my journey, it's been so banking. We're dealing with institutional debt and lending to larger borrowers, and then transitioning to the commercial lending company, which was much smaller than a large bank. Still, you're looking at business finance, and that gave me a taste of what it was like on the other side to do, the reporting associated with lending, the credit underwriting, how you source and raise capital for a lending business. And so I've always had, lending in my DNA. And so I think then coming to Maple, where we focus on institutional borrowers and on-chain capital markets, it's the same fundamentals underlying the business. It's just now we're doing it instead of on traditional rails, we're doing institutional forms of lending, but on the new rails, using stablecoins, using blockchain to tokenize all of the loans. So very, very similar, just a new paradigm.
Interesting. What would you say were things from that era that you took with you to start up Maple, and did you still apply today? And maybe things on the flip side of that about that era that you don't like, and that's maybe
Yeah.
why you got into blockchain, decentralized finance, etc.
Yeah, great question. I do take a lot from my experience in traditional finance and banking. So I think the rigor around underwriting and risk management, and also the type of, just the way you communicate with institutions to kind of sell debt or to raise debt. So, using decks, the type of reporting, very clear, very clear data. And so I learned a lot of discipline being at, at that bank, so I was at National Australia Bank. And I thought, I was part of a great team when I was there. They, were very skilled at what they did. They were probably, the best securitization team in Australia. So I learned, uh, how to put together decks, how to communicate to institutional investors, how to structure the underwriting. And then when I went to the commercial leasing company, uh, I learned a lot around end to end, what it looks like under the hood at a lending company. How do you do the reporting? How do you do collections? How do you do risk management? How do you raise capital? And that company, so I was there for about 3 years, and towards the end, it was taken over by private equity. And so I then saw how private equity revamped the business and set it up for scale through acquisition. So both organic and inorganic growth. So definitely, I've taken a lot, and I would say that kind of forms the fundamental skill set that I then took with me as Joe and I launched Maple. Then the parts that I don't like or that I wanted to change were very heavy reliance on spreadsheets in traditional finance. And this is one of the core issues that I think uh, blockchain and stablecoins solve, is that you have much more transparency around reporting, performance of loans, and indeed the ability to take out a lot of middlemen from that process. One of the ideas that always got me interested in doing securitization and institutional lending on chain was the number of middlemen and service providers that we had in the traditional banking transactions. You'd have a trust agency, you would have a ratings agency, you would have folks who uh, were paid just to process payments. All of that added up to a lot of expenses that ended up passed through to the underlying client and eventually to the end customer. And what I saw was the potential to remove a lot of that and automate it using smart contracts. And so those are the aspects that we try and suck out of the process at Maple. We want to do this with speed. We want global distribution. We want the ability to automate a lot of what we do. And indeed, you're starting to see that now with the penetration of AI into crypto.
How can you elaborate on that?
So uh, our core business now at Maple is we do over collateralized lending.
Hmm.
What we do is anytime we are looking at a new type of collateral, we will run AI back testing to look at the historical volatility of it and assess, what are the odds that we would have had to margin call this client over the last 12 months, and what are the odds that we will have to margin call them over the next 6 or 12 months, however long the loan is. Every morning, I get a daily update sent into my inbox, which has the outputs of rerunning that AI backtesting every day. What we're going to be doing now and into the future is we're going to start to use AI to automate the servicing. So margin call is hit, customer gets an automated notification, uh, automated follow-ups from AI. AI will be able to detect if they've either paid down the loan or given us more margin to protect the position. And then uh, our team, you'll still have people involved, but the team will be able to do much, much, much more. They'll be able to be much more across the everyday risk of the portfolio, and they'll be able to use AI to, execute margin calls or sell collateral if we need to in future. So that's where I see the advantages of AI coming in,
Yeah.
and so it's not going to entirely replace people, but it allows the guys that we have to do 10x more over the
Yeah.
next, you know, 12 to 24 months. That's how I see it.
It's a very exciting time indeed to be running any type of business, because any business needs to be an AI business in some aspects now to move forward.
Yeah, every business, I would say, you know, it's not necessarily that Maple is going to be an AI, like a business operating in the AI space. However, the same way that everybody went from, you know, paper calculations to spreadsheets once they started coming out in the 80s, it's just a force multiplier for the skills and the team that you already have.
Absolutely. We're already front running ourselves a little bit and getting ahead of ourselves, and already talking about the operations at Maple.
Mhm.
Before we get there, I did want to ask you how, like, yeah, sure, you told us, right, that those experiences led to starting Maple. But can you tell us about that specific transition point? Like, did you have a talk at some point with Joe, and was it after, I don't know, some specific event that you guys decided to, put your heads together and venture out on your own?
Yeah, I think it began with, as it does for a lot of people, just investing in crypto a little bit on the side. This was early 2018, so it was kind of after after the 2017 run up in prices, and then the crash or the dip. So started
Mm.
investing in it a little bit on the side, but then from investing in it, you start to investigate and look into things like smart contracts. So then I was reading a bunch of white papers, and then 2019 wrote a white paper for the idea of doing tokenized bonds or securitization on chain. And then we started from there. We then hired a developer just using our own savings in 2019, and so started progressing it in the background. So it was a very gradual process,
Yeah.
while still while still working in traditional finance. And then with 2020, you had the catalyst of the first DeFi summer. COVID hit. So central banks injected a lot of money into the economy and into the venture space. And so suddenly it was easier to raise capital. Everybody was at home because of COVID. So you could then actually raise money from Australia over Zoom calls with investors in other countries. And so that kind of enabled us to raise the capital for Maple among the amid the backdrop of much more interest in DeFi. Whereas it's worth noting, 2019, I was still pitching Maple. It's just that nobody was receptive to it because DeFi was seen as a kind of fad or too small for anyone to be interested in. But I would say, the other thing was, I'd watched that company that I was at get taken over. So I'd seen, all my equity zeroed out. So I had no skin in the game at that company anymore. So I figured, we may as well go from, uh, a company where I didn't have a strategic stake in its direction, nor any upside in the future success of that business, to being an entrepreneur, taking risk and actually having the ability to reap some upside from all that work. You know, Joe and I, when we were working in that business, we both used to work 100-hour weeks. Like on an average week, back in 2018, we were there till 2, 3 in the morning, come back the next morning, and then on Friday nights go and sleep for 15 hours or something to try and catch up. So I'd been working my guts out and had no upside to show for it. So I would have much rather have taken the risk, and we both felt the same way, that we wanted a shot at growing our own business.
Yeah, that makes absolute sense. The incentive was definitely there, and the landscape had meaningfully changed, right? That's very clear.
I
All
think
right, talking about,
every
yeah.
entrepreneur, I think, there's often the idea that you find a problem that you want to solve, and it's really the problem that gets you into starting your own business. But I think every entrepreneur is actually just looking, they're a hammer looking for a nail to hit, and you're just running around trying to find a problem that you can actually start a business around. I would say that's much more like, you know, the impetus for an entrepreneur to go and start something. So I always wanted to start something. I was just looking around for the nail to hit.
Yep, yep. You're running around trying to hit things, and at some point, you actually see
At
something
some point,
stick, right?
yeah,
Yeah.
exactly, exactly.
That's great. All right. Well, you guys have been making it stick with Maple for some time now. Um, let's at a high level first. An on-chain asset manager. What does the model typically look like? How do they generate returns? And
Mhm.
does that apply to Maple as well, or how is it different for you guys?
It's a good question. I'd say asset managers are fairly broad umbrella. When you look at traditional finance, you have Citadel as an asset manager who makes its money from trading. Andreessen Horowitz is an asset manager who makes its money from venture, and then Apollo is an asset manager who makes its money from lending and credit. We fall much more into the Apollo bucket, where our revenue comes from, lending out at this rate and borrowing at this rate, and we keep the spread or the net interest margin in between. So if you look at our business, typically, we're paying out a yield of something like 5.5% to 6, and then we try and lend at somewhere between 6 and 7%, and then we keep the margin in the middle. So that's the way that Maple makes money. And currently today we make around 30-ish million annual recurring revenue.
That's very clear. What are the risks that you guys need to account for, keep an eye on, and how do you manage that risk?
Primary risk for us is going to be credit. So because the nature of our business is lending, we put capital out the door in the form of loans to institutional borrowers. Most of our clients would be trading firms, asset managers, exchanges, family offices. Uh, but we advance a loan to them. What we do to protect our position and protect the risk is we take collateral. The main form of collateral we take is Bitcoin. That's about 80% of our loan book. We also take ETH, Solana, XRP. So we try and stick to the large caps. We're not going out and taking, coin number 100 on CoinGecko or CoinMarketCap, because it would be very hard for us to sell that coin if indeed there was a market downturn. So we try and stick with the large caps. And what we would typically do is if you had $15 million of Bitcoin, we would give you about a $10 million loan. So that's roughly the collateral ratio that we typically take. And then what happens is if your Bitcoin drops in price below a certain level, we ask you to either give us more Bitcoin or to start to pay down the loan so that you're back to that same ratio, 100 and 150-ish% over collateralized. And then if it continues to drop, or if you don't post more collateral or pay down the loan, then we start to sell it. And so that's how we manage risk. So ideally, we never have more money out the door than we have in collateral, and that's what prevents us from taking losses.
That's very clear, and that makes a lot of sense. What are some constraints or frictions that you operate under as a business that maybe limit what you can or can't do?
It's a good question. I think as an asset manager, you could take the view that we can go and do anything. So we could go and do venture, we can do liquid trading. To a certain extent, FTX had this issue, right? They had customer funds and assets, and they were supposed to do a certain thing with them, and instead they did everything. They bought Anthropic shares, they bought liquid tokens, they advanced loans. So I think our main constraint is that we stick to doing over collateralized lending to institutional borrowers. So operating within that framework, that's effectively the job people are paying us to do. They ask us to generate a yield by taking credit positions. And the main one we do is the over collateralized lending. So I'd say that's the primary constraint is we don't want to have mandate creep. We don't want to be going out doing under collateralized lending. We don't want to be going out and taking, liquid positions in tokens or doing venture. The other constraints are interest rates. So we operate in the market. We can't make, unfortunately, despite the fact that we are now reasonably large, we can't shift the market in interest rates. So we have to kind of operate within the constraint that we can only put out as much in loans as borrowers are willing to take. And we have to, respond to things like the Fed cutting rates.
Mm.
So that'll impact the type of returns that we generate for our clients. So I'd say those are the two main ones. The other ones are institutional adoption. So we lend to institutional borrowers, and then we primarily take capital from large institutional allocators. So we are looking at and very excited by the acceleration as more traditional allocators come into the space. But that's a constraint for our size. We can't grow faster than the rate at which new money comes in on chain.
That makes a lot of sense. Sure, the industry and the economy as a whole is at a certain place in time, right? And that determines what you can do or how high the ceiling might be.
Yeah.
Um,
Yeah.
yeah.
If you try and grow too fast as a lending business, you blow up. Like that's historically what happens is that a lending business grows extremely fast and then they start taking imprudent risks. They get over their skis and then there's a pullback and you find out that they are swimming without a bathing suit. So we try and we obviously want to grow as fast as we can, but we want to grow prudently and we want to do so without taking outsized risks.
Yeah, slow and steady wins the race, as they say. Um, I imagine that, like in your position, you you see a lot of what these institutions are doing, how things are developing. Um, who are taking out loans, who are providing loans.
Mhm.
Within all of that, everything that you see from your position in the market, what is some data or patterns that you see that you think others don't and that they don't appreciate, that they undervalue, that they don't take into account enough?
It's a good question. I would say right now we're in a market regime where everyone is very depressed about the prices of assets, and so there's a lot of pessimism. But I look
Yes.
underneath that. I think the actual underlying traction is very good. We
Yes.
see large traditional institutions looking at, taking very seriously the idea of lending stablecoins or allocating capital on chain. You know, uh, Morgan Stanley is hiring crypto people. Chase Bank, I think I saw a recent X post that Chase Bank was hiring a crypto strategist or somebody to build the crypto business. So the level of adoption is actually growing much faster than people appreciate. And I think you know, tokenization as well is also taking off. Yesterday, I think Ondo announced that they had a regulatory approval to tokenize stocks and ETFs in Europe. I expect that the tokenization trend will continue. But folks who are looking only at prices would think that everything is terrible and that, nobody is using these products. But my view from inside the DeFi tent is that we're starting to see more institutional interest than we ever have before. Stablecoins are at 300 billion plus in outstanding supply. And, this year we may get the Clarity Act. We already got the Genius Act last year. So I think there's that idea of Carlota Perez has the tech hype cycle, tech versus capital hype cycle. Right now, capital formation and prices is actually well below adoption. Whereas I would have said in 2022, prices were 2021, 2022, prices were way above actual adoption.
Yeah.
So I think
It has
prices will
inverted.
catch up again.
Huh? It's funny. I noticed the same sort of weird like decoupling, this incongruence, right? Like if you look at
Yeah.
the headlines in the news, it's like it's all super positive and interesting, and like traditional institutions are adopting blockchain rails,
Mhm.
etc., regulations. And then you look at the timeline, and like you
Yeah.
said, everyone's like like
Everyone's losing their
depressed
minds. Yeah.
and
And,
losing their
and,
mind. Everyone's terminal.
yeah.
um
Yeah.
yeah.
Yeah. I think, it's as Warren Buffett says, over the long term, the short term market is a voting machine. Long term, it's a weighing machine. And, you know, these businesses are going to generate more cash flows. And eventually you have to, it's inescapable that businesses will end up valued based on their cash flows. And so I think crypto will be fine. It's just we have to put up with this this short term pain and short term pain and you know feeling that we're underappreciated as a sector.
Yeah, well, I think you lay bare there another interesting, um, the way a lot of people in the industry view the market. You mentioned
Mhm.
revenue generating businesses. This has
Mhm.
been a bit of a innovative idea to a lot of people in this industry, um,
Yeah,
right?
yeah,
But at the end of the day, like that's what companies need to do to sustain a certain value. Um, this
yeah,
this
100%.
bleeds this bleeds into my next question, which I was going to ask you, which might touch on this. Is that what do you think is a view that a lot of the industry holds that you actually think is wrong? Like this could be one, but maybe there are others as well.
Yeah, I think this would be one of my main ones that,
Yeah.
that the actual fundamental adoption is exceeding where price action would tell you things are. The other one is I don't really have a dog in this fight, but there's there's always a new privacy chain being launched every few months based on the premise that institutions need privacy. And yet I have yet to see any major institutions do that much volume on these privacy chains. So, indeed, the largest, institution from TradFi participating today has most of which is the Biddle tokenized fund, has most of its business on a public blockchain, Ethereum. So uh,
Yeah.
I think, uh, I think infrastructure is in for a tough period because it was probably overinvested. And uh, I think institutions coming in from traditional finance will be more than willing to use these public blockchains. And I think uh, the focus should be instead on kind of going where the most customers are. So that's how we've always tried to operate our business, is we focus on kind of going where the customer activity is. And and I think that's underappreciated. And I think, infrastructure is probably overinvested over the last couple of years, and that institutions don't necessarily need a privacy chain per se, but that privacy tech can kind of evolve on the public blockchains that we already have today.
That's interesting. Why do you think these institutions are not that interested in privacy? Because like the thesis on paper, it sounds reasonable, sounds plausible. You talk with a lot of institutions. Maybe you have any insights as to why?
I think if you had a privacy option that already had a lot of customers, they would take it. But I think in the
Mm,
first instance, the thing they care most about is going where customers are. So
right.
uh, the most customers, which is where, which produces a network effect, are on in DeFi. They're on Ethereum and Solana and Base. These have network effects. They're not on the brand new enterprise chain that promises privacy to an institution. So I think ultimately you need end customers in order to do business and to transact. And unless these institutions are just going to trade with each other, in which case I think, maybe, maybe they can both elect to do a privacy chain or participate on a privacy chain, and then you can start to get activity there. But what I'm seeing is that actually they would be better served by just going to where the most customers are, and that's why uh, that's why the activity remains on the public chains at the moment.
Clear. And that, yeah, that's very congruent. That makes sense. Um,
And I think there's a heavy institutional selling process from a lot of chains and infrastructure that kind of uh, I wouldn't say misleads, but it means that a lot of institutions end up launching on chains that are not that active, and then they don't find the customer fit there. I think, I think actually it was a tremendous strategic win from BlackRock to go and launch BUIDL on Ethereum. Like, it was very prescient of them. They could have easily gone to an institutional chain that promised them a bunch of tokens to launch there, and then found no customers willing to buy their product.
okay, so that speaks to that there's still a bit of a gap in between people in traditional finance and their understanding of this market, this industry, the tech, how it
Mhm.
works. Do you think that
A
gap is
hundred,
still
a
there?
hundred percent. I mean, I do, and I think, one of the major drivers is just the age of the people who are put in charge of the digital teams, right? Like, they're not putting 30-year-olds or even people in their early 40s. They're putting people in their 50s and 60s in charge of these
Hmm.
teams, and they're out of touch. It's like, I wouldn't be the best person to go and um, you know, make strategic decisions for a Zoomer consumer product because I'm out of touch with that generation. But in the same way, when you put a 50-year-old in charge of the crypto team and they've never used Ethereum or Uniswap or Aave or any of these products, and they probably never even bought crypto themselves before, it's really, they're going to end up making some decisions that they probably shouldn't have.
Yeah,
I think they should just be putting younger people in charge of these teams and projects because they'll have a better finger on the pulse of what's actually going on.
definitely. That's a very intuitive argument, and we see that all the time. Talking a bit more about, like you mentioned, decision making processes at these large institutions. Um, Circling back a little bit to Maple and
Mhm,
how decisions get made, we've talked about patterns going on in the market, right?
mhm.
Developments. What are things that happened in the market, say in the last 1 to 2 years, that caused you guys to say, hey, we have to materially change this specific thing we're doing? We have to maybe not steer the ship around, but course correct significantly from what we were doing before.
Mhm. Well, if I look back to 2023, the answer was we had to shift our focus into over collateralized lending. Prior to that, in 2021 and 2022, we'd been doing under collateralized lending. We needed to get a foot in the door at the time. However, the market appetite for that type of product is totally gone. Still hasn't come back today, even 3 years on. So the shift to over collateralized lending was integral to us being in the position that we're in today, where we have now 4.5 billion AUM. But that was an example of us observing what was in the market, what we could offer to customers that they were willing to buy, and also taking a little bit of a contrarian view. In 2023, people said lending was dead, it was stupid, it didn't belong on chain, and that and we took the view, well, it's probably the oldest business in finance, so maybe there is odds that it won't die out because of one blip in crypto. And so I'd say that was the first one. Then as we look this year, I've been big on the long term and the medium term trend of tokenization, but I was a little bit skeptical in the short term that there is the buy side appetite. What we've seen though is that Maple is getting a lot of inflows, and I've actually seen, I've started to see more investor or buy side appetite for yield that comes from real world assets. So we are starting to re-underwrite that and look at whether we would make allocations to some private credit opportunities in tokenized form. Whereas previously our business was solely focused on over collateralized lending. I think that is still going to be the core of what we do, but the fact that we continue to get inflows, and the market of Bitcoin backed loans is still around 25 billion today, so it hasn't dramatically grown over the last 12 months, has forced us to consider that maybe tokenized private credit is actually happening faster than we otherwise would have expected. So we always try and adapt. Like, what do our customers want? What do we have a specialized skill set or set of expertise in? Which, in my view, is credit underwriting and credit analysis and due diligence, and the ability to source capital. So when we combine those two, we think that we can get a good yield for our clients, and that there's an opportunity to kind of allocate to some of these areas. So I'd say that's probably the change so far that we've seen. The other thing that we keep an eye out for is the regulatory environment. So now there's the possibility that the Clarity Act comes. We have a fantastic product in Syrup USDC and Syrup USDT. So we are eyeing the possibility that US users might be able to access those products once the Clarity Act comes through. Those are our
Interesting.
DeFi permissionless products.
You naturally answered my next question as well, which is more forward looking, right? What are you looking out for? Not just what happened in the past 2 years, what made you course correct, but what are you already looking out for that you might want to respond to? Maybe a question around process is, how do you keep a finger on the pulse? Like, how do you, as a CEO at Maple, with so much going on, how do you stay on top of what's happening and where the market is moving, but B, also decide what to pay attention to and what to double down on and what to eliminate?
That's a good question. The space moves very quickly, so you do have to keep your finger on the pulse. Uh, I still take a lot of customer calls and client calls and partnership inbound. So I could not do all of that and delegate. I delegate some of it, but I don't want to delegate all of it, because I still that's where I get inputs on what's happening in the market and what are interesting new trends and opportunities for us. Uh, and then also gathering information from our team. So, speaking with our sales team and capital markets team and our growth team. So I'd say a very important part is the gathering of information, and also attending conferences. Then the second part is, how do you filter that and distill that into actionable projects and opportunities to pursue? This is where I've historically probably had a problem of trying to do too much stuff, whereas my co-founder is much more disciplined in this respect. But I think what we've said is we have an overall focus, And for us, the North Star has been over collateralized lending, being an on-chain asset manager. But you can also uh, within that North Star, you can still, zigzag a little bit on your way to get there. And that would be looking at smaller opportunities where you can place a small bet, see if it pays off. And if it pays off, then you can make a decision to grow it. You don't want to be making bet the company decisions on, 10 different bets. That
Mm.
decreases the focus of everyone on the team. But you can lay a couple of small bets here and there and see if they pay off. One of the big trends that we are expecting this year that we want to capitalize on is the entry of Web2 fintechs. So we want to get our Syrup USDC and Syrup USDT products integrated with some of these earn programs, whether it's a Robinhood or a Revolut or a Lemon or any of these neobanks that we think will be coming into the space. And we think that's a potentially very large opportunity. So that's one where we'd like to invest significant effort and resources into, because if it pays off, it's going to be game changing for the business.
How big is the team, the total team at Maple about now?
We still run fairly lean. We would be about 38 or 39 people. Uh, we grew maybe 10 to 12 people over the last 12 to 18 months. And yet the AUM that we had grew 10x over the last 12 months. So we get a lot of operating leverage. We don't need to double the headcount in order to double the business again, because it's a
Yeah.
very scalable business. And I would say that's one of the attractive things about it is, we could grow our loan book uh, double where it is today without having to add significant headcount, because of the type of institutional lending we do, and also because of the advantages or the efficiency gains that we've been getting out of technology, whether it's you know using AI for risk management and also for coding and engineering.
Understood. Where I wanted to go with that question was, you talked about making these small bets, right? That you can see if they pay off, and then you can turn them into bigger business lines. I was
Yeah.
wondering if the way you go about that is like setting up small team units that are solely focused around those new opportunities, or how does that work on an operational level?
On an operational level, what we would do is give team members, let's say the capital markets team or the growth team, just give them, give an individual team member ownership of a project, and allow them to kind of run at it for a while. And if it's cross functional, then other people, from the engineering or product team can be involved and help to make it happen. But I think it's more just giving somebody clear ownership and then accountability for it. If you split up your overall team into too many different miniature teams, it's not
Hmm.
cohesive. But if you give a person just ownership and allow them to run at it, but then hold them accountable for it, I think I think that kind of yields better results. And also, we're not doing too many projects at once. You're only doing a very small number so that you don't create distraction for people. You still have the North Star that you're running at. Another small bet that we're running at this year is we think that institutions will come in uh, and be attracted by things like securitization or structured finance. This is, the idea that we could set up a warehouse and get it rated. And this is the type of lending that traditional allocators are very used to. And you have the ability to get a rating for it, which means you could get it to investment grade. And then you have a very large universe of investors for that type of product. So we think the space is maturing, and that as it matures, it's not going to resemble traditional finance in all respects, but there
Hmm.
are going to be some ways that it replicates products and investment structures from traditional finance. And so we're working on a deal at the moment, and this is us laying a bet on that thesis.
Interesting. All right. So you have multiple interesting things going on. These bets, I understand they're not too many, but what I do wonder is like, how do you know or decide that it's actually more than just interesting? It's like, okay, this is working. This is worth doubling down on. Like what does the process for that look like? How do you know?
It's a good question. I think the main thing, you either see a response from the market where people take you up on it and buy it, and that's probably the single best signal,
Mm,
is that there's demand to offer more of it, and so then you have to produce more of it. In the securitization sense, this would be we find other investors who want something like this, or other customers who ask for the type of structure. Um, if that doesn't happen, then you have to have taste and conviction and an idea that you are right, but just early. And that it's a question of how early. Do you want to keep belaboring the project or the bet for 12 months? Or are you only 6 months early and you only have to carry it for another 6 months? We've had things that we've tried to do in the past that were maybe too early, and then we abandon it or say that we'll come back to it. 2022, we launched on Solana, and then post FTX, the DeFi ecosystem experienced a contraction, and we said, okay, we as a team need to consolidate. We had to cut costs. We lost some good people, and but we came back to it last year, and that's been a real success. We crossed over 300 million on Camino, so that was an area where our overall thesis over the medium term was sort of paying off and playing out. However, there was a blip, and we had to be tactical and adjust course there.
okay, so it sounds like, yeah, making bets, but also staying agile, right? You
Have to
can
stay
be too
agile.
early. Yeah.
You have your North Star, but you don't have to get to the North Star in a straight line. You can zig and zag on the way there.
Yeah, that North Star. Maybe let's talk about that a little bit more because to wrap it up, I always like to ask, all right, what's on the horizon for you guys? But it's already clear that you have multiple things going on. You have a few horses in the race, not too many, but a few that you're confident about.
Mhm.
But beyond all that, what remains the North Star for you guys over the next 6 to 12 months?
Well, I think the North Star goes out even further than that, and it's kind of like the next 3 to 5 years. But
Mm,
the next 6 to 12 months, we want to consolidate and get more market share in the over collateralized lending space. We need to get our utilization up, so we need to start deploying more into institutional loans. But beyond that, our North Star is that we want to be one of the biggest asset managers overall. I was gonna caveat that with on-chain asset manager, but we want to be the biggest on-chain asset manager and one of the biggest overall asset managers over the next 5 to 10 years. I look at Apollo, who has, the prime position in alternative lending, about 650 billion AUM, and that's where we want to get to. And we think that the fact that everybody's going to be doing all capital markets activity will take place in stablecoins on blockchains using tokenized assets in that future. We think we're best positioned to capitalize on that because it's very difficult for an extremely large institution to change course that much. And so we think that this is a huge segment with a lot of runway ahead of it. And so that's where we want to get to is hundreds of billions of AUM and be, the largest on-chain asset manager with a real focus on lending.
well, you guys have made aggressive targets pay off in the past before, so um, yeah, my money is on you guys if it has to be. Um, if there are any serious listeners out there, maybe parties who want to partner with you guys, or simply people who want to allocate, whether that's individuals or institutions, where can people best go to learn more?
It's a good question. So they can go to maple.finance is our website. We have a contact us page. We also are pretty active on X. So we are at Maple Finance and I am at Syrup Sid on there. So they can always reach out through DMs or tag us there. But that's where we post most of our updates. And and then otherwise head to the website and reach out or email us at contact@maple.finance and we'll be pretty responsive.
Perfect. That's great. Sid, I really enjoyed this conversation. It was very insightful, quite deep. I really loved getting your perspective on how you think about running a business like Maple. Also, the experience you took from your prior background into this whole endeavor, and your vision for the future as well, and the heights that you want to take Maple to, and given some of the fundamentals that you laid out, um, I think it should be possible. I hope a player like you guys from our industry can yeah secure that position of dominance.
That's the goal. Nothing risked, nothing rewarded.
Very well.
Yeah.
That's great.
Yeah, I
I hope you
appreciate the
enjoyed the
support.
conversation. Yes, of course. Um, Thanks for coming on. It's been insightful.
No, my pleasure. I really enjoyed the questions, and hopefully, hopefully listeners have a clearer picture of what we're doing at the moment, where we've come from, and where we want to go.
Well, I definitely think they do, and if they don't and still need to learn more, they know where to head. So that shouldn't be a problem.
Yeah,
And to the
awesome.
listeners, I we hope you guys enjoyed the show as well. Uh, this was Market Cap, where we feature firms and funds to explore the thinking that guides them, the patterns they observe, and other forces moving the markets. See you on the next Market Cap.